Day trading in 2025 is completely different than even just last year. Now all traders are making the switch from forex to futures. In this video, I'm going to take you from beginner to expert, showing you my exact 7-step process that helped me go from losing thousands of dollars in the market to making over $2.7 million in just the last 2 years. So let's get straight into it. So first things first, what is futures trading? So futures is just like any other pair that you would trade when it comes to day trading. So if you're trading stocks, then you would be trading Apple, Tesla. If you're trading Forex, you'll be trading AUD, USD, GBP, JPY, indices, US 100, US 30. You get the point. Futures is exactly the same thing. It's just another pair that we can trade. But instead of trading a stock option or a currency, we're going to be trading with contracts. So instead of putting 5 lots on a currency pair or buying 10 shares of a stock option, we're going to be buying 10 contracts. And don't worry, I'll show you exactly how to enter and exit a trade and how to calculate your positions in a little bit. But first I want to talk about what's the difference between forex trading and futures trading, and why is everyone making the switch over? So there's a couple key factors that led to me and everyone else switching over to futures. First things first is futures is a lot more regulated than forex was. So with forex, if you pulled up gold on different brokers, they would show different price action, different closes, right? They can be manipulated easily by the broker that's hosting it. But when it comes to futures, if you pull up gold on any broker, they're all gonna look exactly the same, which creates a good trading environment and just really makes it fair for all of us to try to make some money. Second benefit of trading futures is we don't have to deal with the spreads. When it comes to forex, you have to pay the broker to put your trade in, right? So let's say we're looking to take a buy. We enter our trade right here, but we have to pay that commission to the broker. So our trade is really entered up here. So instead of having a 1 to 3 right here, now we have a 1 to 2 or 1 to 1 risk to reward. Meaning if I risk 1,000, instead of making 3,000, I'm going to only be making a 1 to 1, which is 1,000 to make 1,000, right? Because the broker put you in up here instead of down here where you entered at, which makes you lose a lot of money. Whereas when it comes to futures, wherever you enter is where you enter. There is no spread, so they're not going to put you in later in the trade, which is a great benefit. That alone was enough to make me switch over. Also, when it comes to getting funding for your trading account, futures prop firms have the cheapest rates. So on forex, when you would want to get funded, say a 200K account, you would have to pay $1,000, $1,500 to get a challenge. With futures, you can pay $100, $200 and get the same amount. And last but not least, you can trade directly on TradingView. So there's no need for extra platforms like MetaTrader or DXTrade, where you would have to mark up all your analysis on TradingView and then take the trade on this other platform. No, you can trade directly on TradingView, which we will get into in a little bit. So now let's get on the charts, and I'm gonna show you what's the best pairs and times to trade, how to calculate your position, how to enter and exit, all that good stuff. So let's go. So we're right here on the platform TradingView. This is where we will do all our analysis. It's free to sign up, so just Google TradingView, sign up with your email, and it's free to start learning and trying it out. But once you actually start trading, you're gonna need to update your plan to get real-time market data so it's not delayed. But most prop firms will include that when you buy their challenge, which we'll get into in a little bit. So when it comes to trading, you obviously want to trade on the best pairs, right? Now, my favorite pairs are NQ1, GT1, which is basically NAS 100 and gold. So let me show you a real example on how to actually calculate your position. So we're going to go right here. We're going to hit the short position. And let's say we want to take a sell right here, right? Short means sell, long means buy. So let's say we're going to take a short position right here. This is our stop loss right here at the red. And this is our take profit, meaning if price comes up here and it hits this stop loss, we lost for the day. Let's say if price comes down here and hits our take profit, that means we made money, right? So to calculate this position, I'll go to create limit order, right? And it's going to be set on limit. So if we put our limit right here, that means when price comes down, comes back up and taps this, it'll enter us in the trade. So as soon as it taps it, we will be triggered into the trade for it to go down, hopefully, and us win. So that is a limit order. Market means we're going to enter right where the market is at. So the market's right here. As soon as we hit sell, we're going to be entered in the trade, right? We're entering where the market is currently at. Stop means we're going to enter when price hits that direction. So price is in an uptrend making higher highs, higher lows, higher highs, higher lows. So let's say we want to enter when price breaks this higher high right here. So as soon as price comes and taps this, we would be enter the trade and hopefully hit our TP. So that's what it means to enter a stop limit. So the difference between a stop and a limit order is when it comes to a limit, we're looking for price to come down, retrace, right? Meaning come back to tag us in. So a stop is we're coming down, and instead of a retracement entering right here, we're going to be entering down here, going with momentum instead of trying to get back in on a retracement. So our stop would be right here. This is where we would enter the trade instead of a pullback. Okay, so if I wanted to enter this trade, we want to know how much contracts to put. We're gonna go to create limit. We're gonna go to limit order, market order. Let's go to market for right now. Let's say I wanted to see how much one contract is, right? So I put 1 under units, and it's going to tell me exactly how much I'm going to risk with my stop loss right here. So we would be risking $1,865 on one contract. So let's say I wanted my stop loss down here, right? Small stop loss. Go to create limit order, go to market, push 1 again, right? And now it says we're risking $975. Right, so wherever you put this stop loss, it's going to change how much you're risking on the trade. So if I put all the way up here, put create limit order, go to market, push 1, now we're risking $3,750, right? So this is doing a calculation for you. So now that you know how to calculate your position, I want to show you how to connect your prop firm or broker to TradingView so you can actually take trades straight from here. So if you come down here to trading panel, you can see all the brokers that allows you to trade directly on TradingView, right? When it comes to futures, you want to use Trade08. Now, most prop firms have them. That's what I use. You can copy trade on there. It's just a good platform. So Trade08's right here. So you would click this, sign in. So from then on, you can trade directly on TradingView. So you would enter your trade, move your stop loss, take profit, everything on here, which is great. So now that we covered all the basics that you needed to know, now I'm going to teach you a perfect strategy for beginners where you can go out and start making money today. After that, I'm going to show you real trades that I've taken, payouts that I've gotten in the last week, and the best prop firms that you can use to go get funded millions of dollars to trade with. But now let's get into the strategy. So first thing we got to do is get your chart looking right. So we're going to add a couple indicators. The first one is kill zones. That lets us know what session to trade in, right? So you're going to go to indicators. You're going to type in kill zones by Oscar VS. So once you click that, these colorful boxes will pop up and you're probably like, what's going on? You're going to come over here to settings right here. You're going to put inputs. You're going to turn them all off besides New York session, because New York session is the best time to trade. So now we have this box right here. Now this white line indicates New York session has just opened up. So this is when we want to be trading. I like to stop trading after 9:30 a.m. Pacific time, and we started trading at 6 o'clock Pacific time. So that's the first indicator called kill zones. This lets us know when to start looking for a trade. The next indicator you want to add to your chart is the EMA, or the moving average exponential. So if you go to indicators, you're going to see moving average exponential. Once you click that, come to settings, you're going to change the length to 13 right there. Push OK. Now we have this line, right? You know, you can change the colors or whatever you want to do with that. Now let's talk about market structure. This is very important. And when it comes to trading, you must know market structure. And if you want a reliable broker that you can trade MT4 on, then you're going to want to go with Henko Trade. I've been with them for years, and they're the only ones that I trust with a large amount of money. So I'll put my affiliate links down below. If you want to trade with the people that I recommend, then go to the description, click that link and sign up. Let's get back to the video. So the market likes to move in 3 different ways. We have uptrend, side trend, and a downtrend. So the market moves in higher highs, higher lows, higher highs, higher lows. Now let's say we're in a sideways trend known as consolidation, where we're not making any higher highs and we're not making any lower lows. So the side trend is just zigzagging up and down, right? Then we got the downtrend, which is lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Now, what makes a higher high and a higher low, and what makes a lower low and a lower high? Very simple. This high is higher than this high, making this a higher high because it's higher than the previous high. This low is higher than this low because what? it's higher than the previous low. Same thing for the downtrend. This low is lower than this low, so this is a lower low. This lower high is lower than this lower high, so this makes a new lower high. Very simple, no need to complicate it. Now, these are the markets that we want to trade in. We want to stay away from consolidation. So when price is going sideways, you want to stay away from it because the market hasn't made up its mind on what direction it wants to go. So stay away from these. So now that we know about market structure, now we need to go over what is supply and demand, because this is very important. Supply and demand is basically when the big whales or the big banks enter the market, and we want to ride their wave, right? If a big player is putting millions and trillions of dollars on this trade, then we should be riding that wave, right? So it's easy to spot supply and demand if you know what to look for. So supply is just another word for sell or short. Demand is just another word for buy or longs. Sell is going down, buys are going up. Very simple. Now, a supply and demand push is basically where momentum is, right? So you're going to see 3 or more candles the same color showing momentum, right? You see right here, we have 1, 2, 3, 4 candles the same color with no red candles in between, right? This is showing momentum. Same thing right here, 1, 2, 3 candles, same color, showing momentum. Same thing right here, demand push, demand push. And when it comes to supply pushes or sales, right, it's the same thing going the opposite direction. So we have 1, 2, 3, 4 red candles dropping, no green candles in the middle. So this is a supply push. This is a supply push. 1, 2, 3, 4, 5 candles, all red, pushing down, showing momentum, supply push. Right? It's really that simple. Do not complicate it. So now that we know market structure, we know how to spot supply and demand. Now we need to learn about the candlesticks themselves and what are we looking for? So what we're looking for with this strategy is a rejection candle. Now, what is a rejection candle? A rejection candle is a candle that has a long wick coming out the back of it, right? Now, wick is just this little line right here, this little tail coming out the candle. As you can see, what this wick indicates is that this candle was a full red candle all the way down here. And then the buyers were too strong that the red candle came, rejected, and closed over here, leaving this big wick, right? So that is a rejection candle, and it's a great indication that price does not want to go down here because it tried, but the buyer pressure was too strong that it made it push back up and close. Usually a big candle like this will come after it. So let's look at a couple rejection candles. So we have a rejection candle right here. We have one right here, right here, right here, right here. We have rejection candles all over the place, right? And these are good indications that price does not want to go down. So if you look at every rejection candle here, right here, the next candles, they keep going up, right? So we had this rejection, this candle went up. We had this rejection, this candle went up. This rejection, this candle shot up. This rejection, this candle went up, right? So it just keeps going and going and going. It's a great sign that price does not want to go down at this moment. So what we're looking for is a rejection off of this EMA, this white line right here of that 13 EMA that we added earlier. So once we see a demand push cross over the EMA, then come back to reject the EMA, that is what we're looking for when we'll look to take the trade, right? So let's put this in a step-by-step process. So step number 1, supply and demand. So we're looking for a supply or demand push that's crossing over the EMA. So you see that price was down here, right? The candles were down here under the EMA. Then we got a demand push pushing us over the EMA. So that's step number 1. Finding supply or demand that's crossing over the EMA. Step number 2, a rejection of the EMA. So now that we got that demand push crossing over the EMA, we're going to wait for price to come back and reject this EMA. Now, when you're looking for a rejection of the EMA, you want to see this wick go through the EMA and then the body close above, just like this example, right? We don't want it to just touch it, the EMA. We want it to cross through and then close above like that, getting that nice rejection. Now, step number 3 is enter on break of the candle. Now, what is a break of the candle entry? So let's say we have this rejection candle right here, right? This candle just closed and we're like, okay, we got everything we needed. Now we need to enter on the break of the candle. So you can see this candle closed right here and we're looking for a buy, right? We're looking to buy it up. So we're going to enter as soon as this next candle opens and passes the tip of the candle. So you can just get a line, put it at the tip of the candle's wick, drag it out like this. So when this next candle opens and passes this, we're entering the trade. So you could put your long position position right here stops below the candle wick right here, right? The lowest point. So we're entering on the highest point and we're putting our stops at the lowest point of this candle, this rejection candle. So it'll look like that. So when this next candle opens up and breaks through, we'll be enter the trade, and we're gonna put this for a 1-to-1. So you wanna look at this number right here. It says risk to reward ratio. You want this to say a 1, right? So we're risking $1,000 to make $1,000, or you're risking $100 to make $100, whatever you want to put, right? So when the next candle opens and we come right here, we'll be entered into the trade. So in this example, you would be using the stop option when you create a limit order. I cannot show you because I am in replay mode. So when the next candle enters you in, immediately hit take profit, right? So if you risked $1,000, you would have made 1,000 right here. It's that simple. And you can see that we kept going up, right? We kept going up. So we could have even made even more money. We could have risked $1,000 to make $4,000 because it's the 4 risk to reward right here, right? But with this strategy, I recommend that you go for a 1-to-1 every single time because it's so consistent, and I want you to have consistent results. So with just this 3-step process, you can literally make thousands of dollars every month. So now that I showed you the perfect strategy for beginners, now I got to teach you how to get funding so you can trade with more capital and trade with other people's money instead of risking your own. So the first prop firm we got is Top Step. Very well known, been in the game for a while. The cons with Top Step is their trailing drawdown rule. So once you get past all the rules that they have and you finally get funded, well, now they have a limit to how much you can withdraw at one time, which sucks. Not only that, they'll only let you take 50% of your profits out. So even though that they are a good company and they will pay you out, they just make it so complicated for you to get your payout. And why are they holding 50% of my money? Why can't I withdraw the whole thing? Now, the next prop firm that you have is Take Profit Trader. Now this one is a little bit better. They don't have that withdrawal limit, and you can withdraw within 24 hours after making the buffer. So yes, they have a buffer of $4,500 on the 150K account. So let's say you get funded. Now you got to make an extra $4,500, and everything after that you can withdraw. Not to mention they have a consistency rule in their challenge, and you have to trade for 5 days before you could even get funded. But what I like about this prop firm is that they have daily payouts after you get over that $4,500 buffer. So if I had to rank them, Top Step will be number 3, Take Profit Trader will be number 2, and then the last but not least, which is my favorite, is Funded Next. Now, Funded Next has been in the prop firm game for years, and they just now made this switch from forex to futures trading, and they're providing trading conditions that are just the best out right now. Not only do they not have a limit that you can withdraw once you're funded, but they're actually gonna pay you for your challenge phase, right? So in all 3 of these prop firms, you need to pass the challenge to prove your skills to get funded, where you can actually make real money. Now in these other 2 prop firms, right, once you pass the challenge, that's it. But with Funded Next, once you pass the challenge, you'll actually make 15% of your profits from passing that challenge. So you're already getting paid out the gate before you even trade your funded account, which is amazing, and no one has ever done this before. And once you pass, there's no activation fee for your funded account. So with these other prop firms, once you pass your challenge and you get through all the rules, you still have to now pay them for your funded account. So you're actually paying them twice to get funded. With Funded Next, there is no activation fee. So there's no time limit to pass. So with Top Step and Take Profit, you have to trade for 5 days. With Funded Next, they don't care when you pass. It could take you 1 day, it could take you 7 days, or it could take you a month. They don't care. Now, you do have to trade for 5 days on your funded account to get a payout, but that's not bad at all. It's only 5 days. It's not even a full week, and they don't have no limits to how much you can withdraw. So that sounds like an even trade to me. And let's say you fail your challenge and you need to reset it, right? You'll get a 10% discount on that reset. So you don't even have to pay the same price to retake the test if you fail. But with the strategy I just showed you, you should not be failing any challenges. So by now, I'm sure you agree, Funded Next got that #1 spot for a reason. Like I've always felt like these prop firms always prioritize their profits over ours. But I feel like FundaNext is doing it right. They're really putting us first. They're putting the trader first. And it seems like they're making money when we make money, where the other prop firms seem like they're just making money on us failing and giving you a real shot of building a trading career. So that's why I decided to partner up with them. So if you click my affiliate link down below in the description and use code FXCardinals, then you'll get a discount on your challenge. So by now you should be an expert in everything related to futures trading. I gave you everything that you needed to know and none of all that fluff that everyone is teaching. So I need you to study this, watch this over and over, and get to work. I'll see you guys in the next one. Peace.